Hello, today is December 30th, 2023. As always, we'll start with our disclaimer. We'll go over our calls and we'll make some predictions. And it's the end of the year, so everyone tries to make a prediction for the next year. I'll try that too. First, we'll start with our disclaimer. It's my trading plan for Tuesday, which is January 2nd. 2024. Remember, I can be wrong. Trade at your own risk. I'm also going to try to predict the next year. Remember that the indicators I use for long-term calls aren't the same as the indicators I use for the next day, and they don't have the same level of accuracy. The most accurate forecaster I've ever seen for calling the next year, I think it was Ken Fisher. Someone can correct me on that if I'm wrong. He had a column usually at the end of the year in Forbes magazine where his prediction was made by taking the predictions of as many experts as he could find and then picking the number that was furthest away from all their calls. And his predictions based on that methodology were quite good, and they're probably going to be better than mine, but here goes. First, we'll start off by saying that we had a call on Friday for the pattern with the early low. This is it. And Tuesday should also have the early low. Happy New Year. Here's what we said. We said the wall into the close made gapping up plausible, but we already had enough to call a top in this area. If you started dropping right from the open, I would believe it. These are the patterns I'm expecting to see next week. During the day, we got an ultimate sell signal early. That certainly works. MEJT, so that's not for keeps, gives us a target 47.8558. If we don't gap down smartly, that's my call. Well, let's start from the big picture first and then work our way down. This is my long-term wave count. I'm taking this level here, setting a fib target 5,087 for this rally. Doesn't mean we go up in a straight line, and doesn't mean we go up on Tuesday. This is my count. It called this low within 3 decimal points. That's about as good as you can do. I do look at what other people's counts are. I have a number of counts, practically everyone else's counts. This is a 5-wave structure, in which case this is the beginning of the end, maybe a double top here, but I'm calling this the first wave down, then a recovery, and then another drop. And any count which doesn't break any rules is fine with me. And their count is 1, 2, 3, 4, 5. And from this chart, there's nothing wrong with that. But let's look at this first wave in 2009, 2010. They're counting this as wave 1. Well, they're counting this as a 5-wave structure. Okay. If that's a 5-wave structure, it should break up into smaller 5 waves. Where's the third wave here? The third wave is supposed to be a non-overlapping impulsive wave. Where is it? If that's wave 3 of 1, where's the third wave? I don't see it. I don't think this can be a wave 1. And if that's not wave 1, and it isn't, counting this whole thing as a 5 is dead from the beginning. If you have to fudge the count to make it work, it's the wrong count. In this count, you don't have to fudge anything. All the fibs work. So this is a major low, according to this count, and we're going higher. And that's the longer term pattern. And this took about a quarter of a century to play out. We could be rallying for decades here, if that's the right count. But let's look at the near-term picture. That we've seen. Well, this is the long-term track record of the MEJT system. This is through the end of last year. We'll come to this year in just a minute. This is 21 years. I had 39 targets over 21 years which didn't print. That's under 2 targets a year. When they didn't print, they came in clusters. So we had 24 weeks in 21 years where the targets didn't print. So about 1 week a year on average, I'm going to get some targets that won't print. And we had, how many is it? 3, 4, 5, 6, 7 ultimate targets over 21 years, 1 every 3 years, which didn't print. And we had no unfilled ultimate targets from this year. So really in 22 years, we had only about once every 3 years, I get an ultimate target which didn't print. And don't forget, we get about 500 standard targets and 150 ultimate targets a year. So you can see, maybe 1 week a year I'm going to get a target which doesn't print. And maybe 2 targets a year on average aren't going to print, a bit less. So how about this year? In my book, that's too many unfilled targets. That's 11 unfilled targets. This one is still active. It printed on Friday. I can't count it as a failed target. I've never had 11 unfilled targets in a year. It takes, if I get about 2 of them a year, it should take 5 or 6 years to get that many. So the odds are good. Based on history, I'm going to see most of these targets print. I think this low is going to hold. That low is 4103.78. But I don't know how much of a drop we're going to get here, but we could drop, hold this, and see only 3 targets not print from this year, all in a cluster. It's at least possible. Anything's possible. But that's too many unfilled targets for me. Even though I think we're going higher, I think we're going to trade lower at some time this year. There are certain dates I want to watch. These are based on Christopher Carolan's calendar work, spiral calendar. If someone has some other dates, please let me know. Now, if there is a change in trend, they tend to occur on these dates. But the converse isn't true. Just because you have a date doesn't mean you're going to have a change in trend. These are just the dates you look for changes in trend. Doesn't mean one has to happen. If it isn't one of these days, it most likely won't be a change in trend. Now, another way to do it is by having square of 9 from a prior high or low, and sometimes these dates converge. And this early next week, you have a convergence of time from the spiral calendar and from the square of 9. And we're going to have another convergence in late March and one in early May. But right now, I'm concerned about this one on January 2 and 3. Well, there's a old market aphorism that the first week of the year tells you what January is going to do, and that tells you what the year is going to do. I have my own aphorism, which is the first 1 to 2 trading days of the year tend to run contrary to the rest of the week. So if that works now, it doesn't work every time. We're going to have a rally early next week and then drop the rest of the week. It's a plan, doesn't have to play out. We now have a break of this rising wedge. You still need confirmation. You have to go 1 cent under Friday's close. I think that's going to happen. The target is to take the highest high, is to take the greatest width of the rising wedge, subtract it from the point where you break, and that gives you a target around 4,500. That's quite a drop, but it's not a stop and reverse. That's just a target. However, when you break this rising trend line in a straight line, it tends to return to the line. It can return to the line immediately or where these lines meet. But at some point, we tend to return to the line But this pattern, if it's confirmed by going under this close, targets 4,500-ish. Well, I was looking for a wave A and a wave B, and then I wanted a wave C, which had some kind of relationship to wave A. Well, that could still be it here. It could still be it here. These are fit targets, so we could have completed an ABC. If we get what I want to get, we'll get an ABC up, and then we drop again. It's a plan. Again, I'm not betting money on it yet. But if we've completed an ABC, we could have an ABC up and then drop. And it's not even clear this is a wave 1. This doesn't have to be the end of magenta C. This is an A and a B, because this isn't a clear 5-wave pattern to me. If that's not a 5-wave pattern, we could drop all the way under 4,300 and not really change anything. I'm not saying it'll happen, I'm just saying it doesn't break any rules. Tuesday's pattern has early low regardless of where we open. There's a higher target. If we don't gap down smartly, that's my call. Friday's straight line break under the trend line needs confirmation by trading under the close, but in any event, such breaks tend to retrace to the broken trend line at some point. There's a strong argument to be made for a rally early next week, followed by a resumption of the decline. Assuming the Friday break is confirmed, the rising wedge pattern calls for a retrace into the low 4,500s. It's a target, it's not a stop and reverse. Now, too much time may have passed for the FOMC whipsaw to play out. I usually ignore it after the next meeting. But if it works, that takes us into the low 4,400s. We could retrace nearly all the advance from the October low without invalidating my bullish wave count. And there's nothing uncommon about the wave 2 doing that. None of these possible targets are carved in stone. They just don't break any rules, and they're places to look. Regardless of how much we pull back, assuming we pull back, if we pull back at all, I have a target of 5,087 cash for the rally. Bear in mind my long-term calls are based on different technical indicators than my calls for the next day. The level of accuracy is not the same. The best guess I have is what we see 47, 85, 58 on Tuesday. I look for a rally in the early part of the week. I think we're going to have a drop. I think it'll be a significant drop, probably hundreds of handles if I'm counting this right. But then I think we're going to recover and go up to around 5,087, most likely before this year's out, but it might not be till much later in the year. Well, that's my guess. It's the pattern on Tuesday with the early low. Happy New Year, and that's today's call.